Hello everyone, welcome to Market Monitor. Today I'm going to show you some very promising emerging stocks and talk about how you can use them to your advantage in this new AI market. Let's get into it. Palantir has been making some very big moves lately. Over the past 6 months, Palantir's stock has jumped by over 40%. That's no small feat, especially for a company that's a bit more niche compared to others in the tech space. So why is Palantir at the forefront of data analytics and AI? Well, they're not your typical AI startup. What they're doing is helping governments and large enterprises make sense of massive datasets through their advanced software, and this gives them a huge edge to the AI market. No other companies are really focused on this specific sub-market, so they're essentially at full reign, and Palantir is working closely with top-tier governments and global corporations to solve complex problems using their proprietary AI-powered software. They've secured some major government funding contracts, with their most recent one being a $618 million deal to provide AI data analytics services supporting military operations. This level of funding guarantees massive profits for investors, and the likelihood of new contracts is very high. In the fourth quarter last year, Palantir posted a $510 million revenue increase. That's a 23% increase year over year. They also reported an adjusted operating income of $135 million US, which was a 28% increase year over year. The company's government business grew by 32% and their commercial revenue increased by 19%. They also signed a $150 million new government contract in the fourth quarter alone, positioning them for even more growth, which is very promising for future investors. Palantir's revenue model is primarily driven by long-term contracts and subscriptions. They work with both government and commercial clients. Most of their income comes from government contracts, where they provide data analysis and intelligence services to agencies like CIA, the FBI, and the US military. These contracts are usually long-term and very lucrative, ensuring a steady stream of income. For commercial clients, Palantir sells its data analytics software on a subscription basis, and large businesses pay to use their AI-driven platforms to manage everything from supply chains to customer insights. As companies in sectors like finance, healthcare, and energy increasingly rely on data-driven decisions, Palantir's growth in the commercial sector is gaining momentum. This combination of government contracts and subscription revenue makes Palantir's business model both stable and scalable. And Palantir is a very promising stock to invest in 2025. Next, we'll talk about some smaller company, but is showing some very promising growth. Super Microcomputer Incorporated, or SMCI. This one's a bit under the radar for some investors, but trust me, this company is crushing it. The SMCI is a leading provider of high-performance computing systems, specifically targeting data centers, AI infrastructure, and cloud computing. They're a big player in the server space, designing some of the most advanced systems that power everything from AI algorithms to enterprise-level data storage. So why should you care? Let's talk numbers. In the second quarter of 2024, SMCI reported $2.4 billion in revenue, up 42% year over year. They also posted an adjusted EPS of $3.27 up from $2.12 in the second quarter of 2023. That's a 54% increase. This revenue growth is driven by a massive demand for data center infrastructure, especially as companies ramp up their AI investments. SMCI has also seen some strong growth in their AI-driven servers, which are critical for scaling data centers to handle AI workloads. Supermicro generates revenue primarily through the sales of servers, data center hardware, and AI-powered computing systems. Their products are used by cloud providers like Amazon Web Services, Microsoft Azure, and Google Cloud to build the backbone of their infrastructure. As cloud computing and AI continues to expand, these high-performance systems are essential to handle the increasing demand for data storage, processing power, and AI workloads. The company also earns revenue from software sales and service contracts. They provide customizable hardware solutions to clients, and these products are crucial for running data centers efficiently. With the projected growth of the AI-driven server market, SMCI is in a prime position to benefit from this trend. As more enterprises move to the cloud and need specialized infrastructure for their AI models, Supermicro's growth prospects are solid, and I'd highly recommend investing if you're looking for some long-term growth and some solid short-term growth. Now let's talk about Upstart. This company is shaking up the lending industry using AI. Upstart uses machine learning algorithms to assess credit worthiness and approve loans, and their technology is disrupting the traditional credit scoring models. Traditional credit models like the FICO often miss key data points, but Upstart's algorithms have been shown to reduce loan default rates by offering better rates to borrowers. They partnered with some of the biggest names in consumer finance, like Chime and Galileo. Here's the deal: Upstart's business model is growing fast. In the third quarter of 2024, they reported $240 million US in revenue. That's a 51% increase year over year. But the real win, their loan volume grew by 67% in the same period, showing this increasing demand for AI-driven lending. Upstart's loan approvals volume hit 3.5 billion USD in the third quarter of 2024, and that's just the beginning. Upstart generates most of its revenue through fees and interest from loans originated on their platform. They partnered with banks and credit unions to originate the loans, and Upstart receives a percentage of the loan volume as a service fee. The company also makes money from the sales of loans to institutional investors, earning fees from origination and servicing. Upstart uses AI to analyze a wide variety of factors when determining a borrower's credit risk. Their model not only helps offer better loan terms to consumers, but also helps lenders minimize their risk. This AI-driven approach results in lower default rates and high profits for lenders, making Upstart a highly attractive partner for financial institutions. This puts Upstart in a very powerful position to make big long-term profits and short-term gains. Upstart is in a very favorable position from any investor's perspective. As more people turn to alternative lending platforms, Upstart is set to capture a larger share of the $550 billion US online lending market, which is projected to grow significantly in the next few years. This means huge revenue potential as they expand their offerings and grow the network of lending partners. Alright, so how do I think these stocks will grow in the near future? Let's break it down. Palantir, with their expanding role in AI and data analytics for both government and commercial sectors, they're positioned for massive long-term growth. The global data analytics market is expected to hit 105 billion US in 2025, and Palantir is one of the dominant players in this space. As AI-powered decision-making rises, more and more businesses will need Palantir's services. With SMIC, as AI and cloud computing continues to grow, demand for a powerful data center infrastructure is skyrocketing. The AI-driven server market is expected to grow by 32% annually, and with SMIC's strong foothold in that space, their growth potential is massive. Lastly, let's assess Upstart. The online lending market is booming, and Upstart's innovative AI approach is revolutionizing how loans are approved. As more people turn to alternative credit assessments, Upstart's market share is only going to increase. Plus, they're expanding into new verticals like auto loans and opening up even more growth opportunities. All three of these companies are riding the wave of AI's expansion, and the numbers back up their growth potential. If you're looking for stocks that are positioned for massive growth in 2025 and beyond, these are definitely ones to keep an eye on. That's it for today's deep dive into these high growth potential stocks. Thank you all for listening. I'll see you in the next one.